Welcome to Everyday Investor. My name's Nicole Edmonds and I'm filling in today for Toor. We have a really exciting show today. We're going to be learning how to flip properties. So buying, renovating, and selling. We have the guru on the topic with us today. We have Scott McGillvray. Grab your pen and paper, don't go anywhere. The Everyday Investor begins in a moment. Coming up, Scott McGillvray teaches us how our money can make us money investing in flips.
But I have to admit, when I was getting started, in order to build seed capital, it's that sweat equity of the flips that really helped me build my foundation.
Everyday Investor is brought to you by Pro Funds Mortgages, fixed returns, real security. Clover Properties Rent to Own, invest with a purpose. Sam McDaddy Real Estate, full service brokerage for all your buying, selling, and investing needs. Welcome back to Everyday Investor. Today we're talking about flipping properties and we have Scott McGillvray with us today. Scott, thanks so much for being here.
Thanks for having me on the show.
So Scott, I'm particularly excited to be talking with you today because I started investing in real estate 6 years ago. And the whole reason I started was because I went to a talk that you were giving.
Yes.
And so I'm really excited to have you here today.
Well, it's good to be chatting. And I know that we've kept up a little bit over the years. You know, I know what you've been doing and it's amazing what you've accomplished. But you know, I've been talking to people for over 10 years now about real estate investing. And sometimes it's just that little bit of information and motivation and kind of inspiring people to try something different. And hopefully today, some of the things we talk about will help some of your viewers.
Mm-hmm. Can you talk a little bit about those talks that you give? Because you have an education company.
Yeah, I mean, part of when I started doing a TV show, you know, and social media became more and more interactive, we started to get bombarded with questions, and I was trying to answer people online, and I realized that, you know, you can really give people some great ideas and inspire them through the TV shows, but it's really hard to train people on the fundamentals. And real estate investing is pretty serious stuff. I mean, you can make a ton of money or you can lose money if you don't know what you're doing. Mm-hmm. So I started to basically do financial education seminars and real estate investing seminars, just really helping people with their financial literacy, which is something that I think is missing from our curriculum. That, you know, most people go to school to get a job. They don't go to school to become successful.
And that's with Keyspire is the
yeah. So Keyspire is the mothership, right?
Yeah,
that's our kind of covers all our coaches, all our teams, and we travel all across the country, just training people at different levels and coaching them to success.
Okay, so we're going to get into talking about flips, and so because you have experience investing in a wide array of real estate strategies.
Yes.
So what do you like about flips?
Well, I think, you know, flipping it seems to be more of a common practice amongst a lot of new investors. People find it exciting. I should preface this with, I have been flipping properties for almost 17, 18 years, probably, off and on. And truth and just full sort of transparency, it's not necessarily my favorite investing strategy, not because it's not exciting and not because you can't make a lot of money, but because in the long term, it doesn't provide the same sort of results as the buy and hold model does. But I have to admit, when I was getting started, in order to build seed capital, it's that sweat equity of the flips that really helped me build my foundation.
So when would a flip make sense for a person? Like what does that investor profile look like that they would move forward with a flip versus a buy and hold strategy, say?
Well, I mean, the approach to buy and hold and flipping properties is very similar at the beginning. You are looking for undervalued and motivated sellers, undervalued properties. A lot of amateur investors don't realize that sophisticated real estate investors make a lot of their money on the front end of the deal. It's how you buy the property that really sets you up to be profitable in the long run. People think a flip means you just buy a retail property, you fix it up, and you sell it at a premium. When the truth is, the most money I've made on flips is when I'm buying them at wholesale, fixing them up, and just selling them at retail. It's a lot easier to do it that way, but it takes more work up front. You don't just go out and say, here's a house that needs work, I'm gonna buy it. It really is about finding the house that needs work with the seller who's motivated enough to sell it at a slight discount, perhaps. And the day you close, you're like, great, I've already got like 20, 30, maybe 40 grand of equity based on just the way I bought it. And then when you fix it up, you can even grow that to maybe $40 or $50 or $60,000 in profit.
So, and when you're talking about like finding those motivated sellers and using those strategies, is that working anywhere? Is that working in big cities and small towns, or is there kind of a niche area that you're looking at?
I would say that there's nothing niche about this. It works in big cities like Toronto and Vancouver, New York and Houston. I mean, we see flips happening everywhere. Personally, I've done better in smaller markets with some of these, mainly because there isn't as much competition. It's sometimes easier to be a big fish in a small pond, right?
Yeah.
You get into some markets where there's aggressive buyers or very emotional buyers too. Like when a market is heating up, typically people are making unreasonable offers that make no financial sense. They're just satisfying an emotional aggression to want to live in a certain area. People are like, I'll pay anything to live there. And an investor's like, I'll pay anything if I have a return on investment, which I don't have here, so I can no longer buy in that area.
So we were chatting a little bit earlier, and you mentioned 4 types of flips.
Yeah.
Can you talk a bit about that?
Absolutely. Most people probably understand what a traditional flip is, which we'll get into, which is, you buy it, you fix it up, and you sell it. You try to make money. But over the years, I've realized that is, a very basic sort of model, and that there's some more sophisticated ways to flip properties to get more money out of the product. There's more juice if you know how to squeeze it right? So the traditional flip is when you're buying the distressed property, you're fixing it up and you're selling it, and you're doing that over the shortest period of time as possible in order to make a profit on the renovation work that you're doing above and beyond all your expenses. And I have an example we can go over afterwards of a traditional flip, because I did just over a dozen of them last year. But there's also flip to yourself, which is kind of goes back to this idea of whether you're flipping or you're doing the buy and hold, you're purchasing them the same way. Well, you can take it one step further. If you're going to buy an investment property or a rental property, the best ones are not found, they are created. I've always said this. So why not get that distressed property that needs work, fix it up, turn it into a great rental, but also do some sort of refi in order to pull your investment out. So you're basically flipping it back to yourself at its new value so that you can recoup the money you've invested to deploy it into another asset.
Okay.
Does that make sense?
That makes sense. So, and a benefit, because when we're talking about the traditional flips,
yes,
you're not making that kind of cash flow going forward.
Yeah, traditional flip, you're in and you're out.
You're in, you're out. But then you're able to take that chunk of money and move it to the next deal.
Right. Well, even better, I think for people who are flipping, it's like you're out, so you're clean. Like take a holiday, do whatever you want.
You're not even thinking about that.
Not even thinking about it because it's gone.
Yeah.
Whereas flip to yourself, you've bought it, you've fixed it up, you've rented it out, you've refinanced it or restructured your loans in order to pull as much equity as possible, but you still own the property. And the beauty of flip to yourself is you have access to a lot more money than a traditional flip because you don't have closing costs on the back end, you don't have realtor costs on the back end, you don't have capital gains or income tax on the back end because it's considered a debt restructure versus an actual transaction. I'm talking like an accountant now, but it's you basically can tap into pure equity, pre-tax dollars, which gives you a ton more buying power. And it's a bit of a long session to go through how this really works, but it is probably the most powerful growth strategy in real estate. Like if you're the person who wants to get into real estate and grow a portfolio as fast as possible, you need to know how flip to yourself works.
Yeah, and I think that's an important point, though, that you're not paying those taxes that you just mentioned. So you're able to access a large chunk of money and move that over without all those fees. That is something that I think a lot of people don't know. So we have to take a quick break here. I think we have 2 more strategies to talk about on those 4.
There's 2 more types of flips I haven't even got to yet.
Yeah, so we'll talk about those when we come back. And you've brought a case study as well, so we can go through those numbers. We'll be right back talking to Scott McGillvray on investing in flips. Everyday Investor is brought to you by ProFunds Mortgages, fixed returns, real security. Clover Properties Rent to Own, invest with a purpose. Sam McDaddy Real Estate, full service brokerage for all your buying, selling, and investing needs. Welcome back to Everyday Investor. We're talking to Scott McGillvray about investing in properties and flipping them. So Scott, we were just talking about, you had said there's 4 different types of flips.
Yes.
We've gone through 2 of them.
Yeah.
So what are the other 2?
So you got your traditional flip, which we went through. Most people know how that works. You've got your flip to yourself, which basically is flipping a buy and hold property into your portfolio. But the 2 others that most people don't touch on or aren't really sure how they work because they take a little more kind of clever upfront preparation is what we call the instant flip. The instant flip means that you don't usually even take possession of the property. And you're flipping it before you even take possession, so it's instantly sold to somebody else. And I know you're looking at me like, what does that mean exactly? And this is, again, you have to be careful with this. It's pretty common in the US. It's less common in Canada, but it does happen through things like assignment clauses, where, and I did one of these last year, which made a significant amount of money for me. It wasn't part of my plan, but I know how it works, so I ended up using it. But basically, if you're like me and you're kind of knocking on doors once in a while, you've got your eye on certain properties, or you're able to help somebody who's motivated to sell a property do it with ease, and you can acquire or secure that property below what it really would potentially sell for if it had to go on the market, you can then pass that deal off to another investor. For a lot of people who don't want to put their house on the market, they don't want to have an open house, or they really need to get out of a property fast, this can be a great technique. It's what they call like a no money down strategy.
Okay.
You don't need to have any assets in order to secure a property or get it under contract and then assign it to someone else and make your 5, 10, 20 grand depending on how well you secured it. So it's an instant flip because it happens before you even take possession.
Okay, so it's different. You're not doing a renovation, you're using
no renovation.
Those, you said having skills as a buyer, we talked
Correct.
about that in the last segment, having strategies to get those properties for under market value
Absolutely.
and then flip them over for market value.
Exactly, there's no renovation in this. There's no investment other than time for the flipper. They're finding and securing it and basically negotiating the deal and then passing it off to another investor to move on with a traditional flip or buy and hold at that point.
Okay, and what's our 4th type of
The 4th
flip?
one is what I call the automatic flip. And basically what that means is you are doing a traditional flip, but you already have your end buyer. So again, this is working with buyers and sellers. So if I have other investors, I know what they're looking for. You come to me and you're like, Scott, I really want to do a, 3-bedroom up, 2-bedroom down student rental. Is there anything you can do? And I say, well, I have found this property that I could convert into the exact property that you want. And instead of, you paying me as a contractor, I might secure the property. We can both go on title as joint venture partners. And then once it's done, you buy me out of the deal. So the purpose of this is, number 1, if I can't qualify for a mortgage or I don't have a down payment, I bring in a joint venture partner who can qualify. So we're buying this house and in the agreement, you're putting this down payment and you have this equity. And then once we're done, we get the home reevaluated so that you can flip me out of the deal, basically.
Okay.
I get paid out on my portion of the equity, and you take the property 100% in your ownership, and we don't have to transfer title, we don't have to close, we don't have agents. So the automatic flip is designed to help both the renovator and property finder and the investor reduce the amount of fees involved in a flip and the peace of mind as well.
Yeah,
right?
There's no risk of,
risk.
it sitting on the market and you don't know if you're going to get a buyer. You already got your buyer
You
before
already have your
put all that
buyer
effort.
before you even have your flip.
Yeah.
It's pretty smart. And if you're willing to kind of get into this business and build a small network of investors, people who do the automatic flip will typically have 3 or 4 investors that want multiple properties. And they're, for those investors, they don't want to have to find a contractor. They don't want to have to spend every weekend looking at houses. They don't want to do the renovation. So for them, they get all that turnkey.
Yeah, and their partner has skin in the game then.
Their partner has skin in the game, so they're going to show up, they're going to get it done, and everybody saves on all the fees that are eliminated in between. So it's a pretty great strategy, again, for somebody who's trying to build a portfolio or build some seed capital, but maybe doesn't have credit, maybe doesn't have a down payment, but still wants to do flips. Boom, there you go.
That's a really clever strategy. I don't think a lot of people know about that strategy.
They don't.
Yeah, and it makes a lot of sense.
Yeah.
So, Scott, you've brought with you a property that you flipped.
Yes.
And we're going to go through the numbers on that.
Sure.
Okay.
Absolutely.
So tell us a bit about what this property was.
So this was last year. Last year, like I said, I flipped just over a dozen properties, a bunch of them for the show, right?
Yeah,
like I was
for
doing
Buyers Boot Camp.
For Buyers Boot Camp.
Yeah.
We flipped 11 properties on that show, and then I only did a couple extras on the side. Like I said, it's, there's times when flipping makes sense. When the market's moving with you, it's a lot easier to make money on a flip than when a market's moving against you.
Yeah.
So this is a property that was purchased in St. Catharines.
Okay.
So not necessarily like a major market,
Yeah.
more of a secondary market. It was a nice Victorian home, $450,000 approximately on the purchase price there. Sort of rounded the numbers for you.
And it's a home.
This is a home.
A single family home. Okay.
Single family home.
So you said purchase price $450,000.
$450,000.
Okay.
Now some closing costs on there, some adjustments to be made. So about $20,000 on closing as well.
So $20,000 out of your pocket for closing costs, and then someone would put a down payment
like
on
a 20% down payment. You're looking at $90,000.
20% down. Okay. So $90,000 on the $450,000.
Yeah.
Okay, and then this was obviously a renovation project. So what were your renovation costs?
You're looking at about $100,000 in reno costs.
Okay, $100,000. Okay, so your total cash invested was that $100,000 from the reno costs.
Yeah.
Your down payment, the $90,000.
Yeah.
Plus your closing costs,
Right.
the $20,000. So we're in for $210,000.
You're in for $210,000 out of pocket. $210,000. Yeah.
Yeah. Okay. Okay, now, so on the show, we talk about the different ways we're making money, our cash flow, the tenants are paying down the mortgage.
None of that's happening
None of
on a
that's
flip.
happening with a flip. Okay.
That's the problem with a flip, is that you have a burn rate, right? You
Yeah.
got no rental income, so you're covering the taxes, the insurance, you're covering any cost of financing, utilities. So the faster you do a flip, obviously, the better.
Yeah, and so that's something that an investor needs to calculate into their numbers right from the beginning, knowing they've got all
Absolutely.
those carrying costs coming.
Yes.
Okay, so we've got zero for all those. But then the real money we're making is from the active or the forced appreciation.
Yeah,
So-
the value we create from the renovation that we're doing.
Okay.
And also the fact that this property probably was worth a little more than we bought it for. It was probably worth about $475,000.
Okay.
But we went in with clean offer, and we're able to secure it slightly below its appraised value.
So clean offer meaning there were no conditions?
Removed all the conditions in
conditions.
order to secure a lower price.
Okay.
Knowing we were going to renovate it anyway, it's like we have to update some electrical plumbing. Like,
Yeah.
we don't need to be told that again.
Right. Okay. So, all right. So, walk me through. You bought it for the $450,000, and you put in $100,000 in renos.
Yeah.
And walk me through what it was reappraised for and how you got to your profit.
We actually didn't get it reappraised when we were done. We listed it for what we found the comparables were selling for,
Okay.
and we got close to asking price, which was great because we had a lot of room on there. We ended up selling the property for $680,000.
Okay, $680,000
$680,000
was your after repair value and then sale price.
sale price.
Yeah.
We did have a realtor, some realtor commissions in there, and we had our carrying costs and closing costs. So another, just over $30,000, but I put $30,000 on there.
Okay, $30,000 were your costs from the sale, and carrying costs you said were built in there.
Yeah.
Okay.
And so at the end of the day, if you take the $680,000 sale price that we got, minus all of our expenses, closing costs, carrying costs, renovation costs, and the original purchase of $450,000, we came out with about an $80,000 profit.
$80,000 profit. And how long did you say this took you guys to do?
This was 5.5 months
5.5 months.
from close to close.
Wow.
Yeah, it was quick.
Yeah.
It was quick.
A quick 80,000.
A quick 80,000, which, there's different ways to evaluate this. A lot of people are unsure how to get into a flip. They're like, what's the deciding factor? How much money should I make? If you look at, for instance, the $80,000, if you're making that money and your total money invested, because the rest of it's financed, total money invested was your renovation, your down payment, and your closing costs, you're still getting a 38% return in 6 months or less.
Okay, so 38% return, that's taking our 80,000 profit, dividing it by that 210 that we
Correct.
talked about at the beginning. Okay, and that gives
Correct.
us our 38, and that's in 5.5
That's in
months.
6 months. So if
Yeah.
you annualize, like double that for a year, I think a lot of people would be happy getting over a 75% return on their money,
I think
right?
so, yeah.
And the truth is, a lot of sophisticated investors aren't, those down payments can be financed as well if you know what you're doing. So it's almost infinite returns if you know what you're doing.
Yeah.
But walking into a property like this, I think if it's your first flip or one of your first flips, you really have to have some sort of deal analyzer or benchmark that you're going to use to help you decide whether or not it's a good investment.
Yeah, so, and that's where you said when you're looking at the purchase price, you have a rule of thumb that you want to see in profit.
You want to make at least a 10% return on the original purchase price.
So that would be 10% of the purchase price would be $45,000.
Right.
That would be your rule of thumb minimum to get in.
Yeah,
and
like
in this case,
you need to be able to make some quick decisions.
Yeah.
So if I'm like, okay, here's a property for $450,000.
Yeah.
If I put money into it and am I going to make $45,000 or more? If I'm not going to make a 10% return on the purchase price, then I'll probably keep hustling, looking for other properties. Yeah. So in this case, you can see sort of my minimum would have been $45,000. We ended up making $80,000, which is almost double. It's almost a 20% return on the original purchase price. So happy with this. This is like a perfect case scenario, and they don't all work out this way.
Yeah.
Some work out better. I've had better flips last year, and I've had worse ones.
Yeah.
But this is sort of your standard procedure.
Yeah, no, and thank you for sharing this, and I'm sure there's still so much more to know before somebody gets involved, but this is a really good look at and looking at the different strategies for flipping, which I'm sure a lot of viewers didn't know about those four. So time flies, Scott, when we're having fun. Thank you so much for coming on the show and sharing with us the strategy of flipping.
No problem, Nicole. Thanks.
And thank you to our audience, whether you're watching on TV, online, or listening to our podcast. Thanks very much for tuning in. For more information on this show or to become an Everyday Investor Insider, where you can get investment opportunities, tips, and advice, go to our website, everydayinvestor.com. We'll see you next week, same place, same time. Thanks for watching.